South Korea's stock market boom collapses spectacularly. The rapid unwinding of AI hype has hit South Korea disproportionately due to its heavy reliance on semiconductor exports. The government's emergency meeting underscores systemic risk to the economy. And before I come back to this, what is happening? Well, not extremely surprised. If you go back, rewind, you'll see we covered this. We were very cautious. Most people believe everything is happening in the US market because it's the US retail or consumers. They need everything. They have all the money. Not understanding that even South Korea and other part of the world, even Japan, whatever is happening with yen carry trade. Another topic, another day. Everything plays a role, including Fed rate. So if you look at Micron here, look at SciVev, look at the charts. Nebius, Applied Optoelectronics. Look at AXT. AXT is below its all-time high, which was made back in 2000. Look at this. Not making this up. Anyway, keeping all that aside, just want to show you how things can change, how quick things can change in this market. Hence, you gotta be very, very careful. Bearish and volatile, driven by a sharp reversal in AI and semiconductor stocks after SK Hynix earnings miss led to Kospi falling 6% in emergency government meetings. Further unwinding of AI hype could deepen the semiconductor-led downturn, with 864 trillion won already exited from the market, amplifying financial instability. The market rout creates a potential buying opportunity for long-term investors in coin equities, with JP Morgan signaling Kospi valuations are attractive. So yes, now we are talking. Now we need to go bargain hunting. But by the way, no rush. I'll cover quite a bunch of picks down the road. Stay tuned. Reality bites for South Korea's memory chip wonder stocks. SK Hynix is a bellwether for the AI trade given its HBM dominance. Its miss suggests AI demand may be peaking, threatening the entire South Korean semiconductor-driven rally. South Korea turns AI into a public utility. This long-term structural move aims to democratize AI access and reduce reliance on private hyperscalers, potentially creating new opportunities for startups and SMEs. South Korea to a cap investment in single stock leverage ETFs. Pay attention to this. They were leveraged. Most retailers were leveraged to a level never seen before. It wasn't just USA pumping the entire market. Hence, you see what you see. It's hard to believe, ain't it? Look at this here. In response to the market rout, South Korea's finance ministry announced it will cap investments in single stock leverage ETFs after the minister apologized for heavy losses. And JP Morgan sees buying opportunity amid Kospi crash. This contrarian view highlights that valuations may have corrected enough to attract long-term investors, though near-term volatility remains elevated. I'm a little skeptical, but yeah, sure, 50-50 on this. South Korea's Kospi plunges 6% amid AI stock rout. Before I end, I found this article interesting. It was posted on X. If you are on X, you can follow us right there. Trade goes to Kobe, see you later. It's a thread. I'm just going to read from this real quick. Absolutely incredible. In an unprecedented move, South Korea's stock market just collapsed. Negative 44% in 40 days, erasing 2 trillion in market cap. Now South Korea's finance ministry has announced plans to stabilize the market. What is happening? Let us explain. First, some background. Between December 2025 and June 26, South Korea's stock market surged 135%. This propelled the country's stock market to the 6th largest in the world, even larger than India. Just years ago, it wasn't even in the top 20. AI changed everything. Look at this. What happened? Chip makers SK Hynix and Samsung saw historic gains, rising 1900% and 600% in 1 year, respectively. These two stocks accounted for as much as 50% of South Korea's stock market last month. Never in history has growth at this scale happened so quickly. See that? We even covered SK Hynix. On top of this, record levels of leverage are being utilized in Korea's market. Leveraged and inverse ETFs tracking SK Hynix held approx 19 billion in total assets, 4x the stock's average daily trading volume of 4.5 billion. Samsung had approx 12.4 billion in leveraged ETF assets. It's a leveraged ETF that's taken most of the market down. In late June, cracks in the market began to emerge. Stock trade defaults reported by firms in Taiwan rose to 70 million in June. This is the highest monthly total since data began in 2019. Trade defaults soared 300% in 2 months and exceeded the 2021 record by 20%. Options were even further out of control. Call options, notional open interest on the South Korea ETF, EWI, surged to a record 5.5 billion in May. To put this into perspective, weekly call open interest did not exceed 700 million before 2025. Another unprecedented move. Sum this all up and the market was ripe for a crash. The combination of record retail trading, market concentration, and unprecedented leverage was lethal. We saw a domino effect style decline, with SK Hynix falling 60% since June 25th. The government is trying to intervene. Today, Korea's government announced an emergency market meeting meeting, the country's finance ministry announced a 24-hour market monitoring system. This includes restriction on leveraged ETF trading and caps in retail exposure to these products. Stocks have bounced on the news. The question becomes, what does this mean for the rest of the world? US memory stocks have followed a similar trajectory. SanDisk and Micron are down nearly 50% from the recent highs. We believe this correction was necessary and will lead to a rotation back into big tech. While memory stocks in South Korea's market rallied, big tech saw its biggest correction in years. However, earnings growth in these names has remained robust. We believe large cap tech is poised to regain market leadership in the coming weeks as memory stocks fade. By the way, I'll cover quite a bit of picks from right here. It makes sense to me. Ladies and gents and investor friends, monitor SK Hynix and other chip makers' forward guidance closely. Consider selectively buying quality Korean tech stocks at discount while hedging against continued volatility by putting it on the big tech. Make sense? This is all I have in the grid report today. I'll see you in the next one.